Let's bring in Beth Kindig, lead analyst at IO Fund, of course, which runs tech-focused stock portfolios. Beth, good morning from the Asia Pacific. Thank you for joining us. Lots to get into. I was hoping to start with Tesla, and it's I think one thing that did stand out, just as we were hearing that soundbite, is just the tone coming through out of Elon Musk, who normally doesn't, exude that sort of low level of confidence. And I wonder how you're looking at the company itself currently, given where the stock price is as well, just to consider that too.
Sure. Good to see you both again. There were puts and takes tonight with Tesla's report. On one hand, there was a quarter-over-quarter improvement in the margins. There was actually a 4% rebound in the average sales price, so that was a positive. But the uncertainty of what lies ahead is really weighing on the stock after hours. Not only did we hear some of that regulatory issues in China, but inventory was up 21%, deliveries were down 13%. That would point to, demand issues and an oversupply. And all of that is ahead of that EV credit expiring at the end of September. So again, the stock is down after hours, and deservedly so, considering the uncertainty of what is coming next quarter.
And I mean, how you look at the stock is really kind of determinant of how you think it's going to perform. Is it actually, the core business is still an automaker? Or do you look at this company and the innovation that you're seeing? Is it an AI? Is it a robotics juggernaut, right? I mean, how should we actually look at this company now, Beth?
Yeah, right here, right now, this is a car company. I don't think that can be... There's nothing that proves the R&D around AI is monetizing. And that is really what is important for tech investors, is broadly even speaking, who is monetizing AI right now? And that's really important considering the tens of billions being poured in to, whether it's AI data centers, whether it's training models, there's tens of billions being poured into that. And until a company can put up material evidence of the ROI on that Capex or that R&D spend, for me, when we're talking about Tesla, it remains a car company. For example, they were expected to deliver 2 million vehicles this year. They've delivered about 700,000, 750,000. They're about 1 million short, 1.1 million short. And until that's all cleared up, I think the AI story, again, that we haven't seen monetized yet, is in the backseat.
Yeah, I guess to the point you just made there are other options. If you like AI, there are other options beyond Tesla. And this earnings season, I'm looking at Alphabet, for example, and what looks to be a good problem to have, they're running into some issues scaling up Capex and getting products to the market. How are you looking at Alphabet at these days, Beth?
Yeah, Alphabet, this was a hotly debated stock going into the earnings, because the question was, how is search monetizing given the time being spent in apps like ChatGPT? They did clear that hurdle tonight. They accelerated search. So not only AI is actually helping internally there with their own, with their own apps, their own leading segment. And then when you look at Google Cloud, that's also accelerating. But again, we're seeing some weak price action because it goes back to the fact that there are tens of billions being spent. Alphabet raised their Capex to about 85 billion compared to about 12 billion that they're seeing in revenue on Google Cloud. So there's definitely a gap there between what's being spent and what these companies can report. My favorite actually would be Microsoft. I think Microsoft is in a very material way saying we have ROI on that Capex.
Yeah, it's interesting, Beth, right? You look at the after hours trade in Alphabet, as soon as they mentioned that Capex figure, it basically killed that after hours rally in the stock. So how are investors basically still running out of patience about big spending when it comes to AI now?
Yes, and now I got my start in Silicon Valley. I was there for over a decade, and the way Silicon Valley does it is very different than Wall Street. Wall Street wants to see those profits immediately, and really this is going to take some time. I don't doubt that these companies in the long run will be winners. it's going to take some time, and I think there's better ways to play it, right? We look at the $85 billion that Google is spending. Well, who is that going to? It's going to AI hardware. And I think, again, right here, right now, that's a much better way to position.
Beth, and to the point that you just made too, like recently, when I say recently, let's call it the last 5 or 6 weeks, AI has again become not just the biggest part of investors' mindset, also the biggest driver of returns. Overall, you look at a Mag 7, how are you viewing valuations at the moment?
Many are stretched. I think you can see them lower. In fact, my firm is rotating away from those stretched valuations and favoring some of these AI hardware plays where, because they're growing so rapidly, there are a couple of AI hardware companies growing 300%. Again, because this Capex just flows straight down the line. And so to me, it's rotate more to those hyper growth AI hardware stocks for now.
Can you tell us what you won't touch and what maybe you think you could rotate to now within that sort of universe?
When I look at something like Meta, Meta historically has not traded this high, and Meta is participated in massive trends such as mobile. When it became a native app and social media and ads, and it's never traded this high. So we are personally rotating out of Meta, and we really favor things like Astera Labs and Credo, which are both AI hardware stocks that in the networking layer that serve, they supply NVIDIA, they also supply custom silicon, and all those tens of billions, it doesn't matter if it's coming from Google, Meta, Microsoft, Amazon, they filter down into that supply chain. It's just a much safer bet, in my opinion, right now.
Beth, it's great to have you. Didn't even talk about NVIDIA today. Beth Kindig, Tech Analyst at AO Fund. We're going to get you back. We've got plenty more ahead. This is Bloomberg.